welcome. I'm Matthew from Rosie and Rosie, investment property specialist, helping you invest in property with confidence. Today we're joined by Alex Filipovic, mortgage broker with Nectar Mortgages. Welcome, Alex, and thanks for having us.
Oh, thanks, Matthew, for having me here.
Firstly, Alex, it's the start of the month, and on Tuesday, as they do every month except in January, the RBA announced the cash rate. Tell us a bit about what was announced and what the banks have done in response.
Well, there's been no change in the cash rate, which was not unexpected. Reserve Bank hasn't got very far to move with rates, and banks have been changing rates out of cycle for quite a while now. So rates seem to be changing quite constantly at the moment, depending on competitiveness, etc. So really no real change in anything there.
Certainly. The RBA cash rate announcement would be a trigger to see what the banks would do. Not so much now. We're seeing movements in rates all the time, regardless of when the cash rate comes
exactly.
out. And probably not going to go down or up for a little while.
No, the movement in rates at the moment is more with the fixed rate market, more so than anything else. There is a bit of competition out there, especially with the smaller lenders. But
I wanted to ask you about that. I understand we're now seeing some lenders offering rates as low as low 2%, and others offering cash incentives. How do you help people decide which way to go?
Best way to do that is run a comparison. Look at how much the client wants to borrow. Put our system builds in the interest rate, ongoing fees. If there's cash rate involved, we just put that cash rate into the loan amount to reduce the debt limit, and then see what the result is, and go by that. And then it's the client's decision to decide which lender they want to go with. But it does come out with quite a comprehensive report showing exactly where the savings are and what the best loan is for the client.
I guess it's always different depending on the individual circumstances.
It certainly is. It depends on what the client's looking for.
Alex, tell us who is on your radar offering competitive rates and terms at the moment.
Well, at the moment, some of the smaller lenders have got some very competitive fixed rates going out there. One of the lenders I've been using lately is Adelaide Bank, because of the conditions they have with their fixed rate loans. They allow redraw, offset, and it's quite good for either investors or owner occupiers, and also additional repayments, whereas years ago fixed rates did have a lot of provisions where you couldn't make extra repayments, so they're quite good. And there's a few lenders out there. My state also have very good rates, and I've looked at Auswide. Auswide are one of the lenders that are involved with the first home deposit scheme. They will allow construction with their fixed rate, as does Adelaide Bank. Adelaide Bank aren't involved with this other scheme though, so there is some good stuff out there that the average client probably wouldn't go to these lenders, because some of them don't have any exposure to the public. They just operate through the broker market.
Network. I wanted to talk to you a little bit more, because I know you love working with first home buyers. Do you have any tips for first home buyers looking to get into the market and make the most of some of these incentives that are on the table at the moment?
Well, one of the tips would be make sure you've got 5% deposit, because that does help. You don't necessarily have to have that, but 5% deposit, it always helps. And also just there are some offerings out there where you don't necessarily have to pay lender's mortgage insurance. And some of the lenders are now offering $1 lender's mortgage insurance for any borrowings between 80 and 85%. But be aware that when you buy a property, you've still got to meet stamp duty costs. But if you've been to your, say, big bank and been told you can't afford a loan, or you can't afford the fees, like lender's mortgage insurance can put some people out of the marketplace. There are options out there where you can borrow money without having to worry about the mortgage insurance being added onto your loan. So there's a lender out there that's not charging any mortgage insurance of any sort until December this year. So that's worth a lot of savings.
And I understand there's a few lenders now who are considering the new home builders scheme grant as a deposit, whereas other lenders may be not considering it as part of the.
No, some aren't considering it. Others haven't made up their mind yet, but some have already come out and said if the client can get conditional approval, they will take that as being part of the deposit. So that makes a big difference, of course, for a lot of borrowers.
That's huge for some. Do you have any other tips specifically for anyone who's perhaps got a loan already and is looking to refinance at the moment?
Well, if you wanted to refinance, you should have 20% equity in your property, but otherwise you've got to repay lender's mortgage insurance, and that's just an extra cost that will just blow out any savings you might have. Shop around, go to a broker or something, but don't necessarily go back to your existing lender, because you may not get the best deal. There are a lot of lenders out there now that are offering some really good products and good terms and conditions, and until you just shop around, you may not be aware what's around. And also be very certain what sort of facilities you want with your loans. You want redraw, offset, and look at the costs involved with some of these, because a lot of people looking for offset facility, not realising it does cost more to have an offset when you don't necessarily need it. If you're an owner-occupier, redraw is all you really require. So there are things that it's good going to a broker. You'll be asked a lot of questions of what you're looking for, and the right product will be chosen for you, hopefully.
Yep. And if you haven't refinanced in, say, the last...
I'd say 12 months.
12 months?
Yeah, 2 years at least.
Yep.
Wouldn't, you're obviously paying too much for your loan,
yep.
Especially if you're an investor, because there has been an easing investor interest rates as well. So, but there's, as I said, there's some really good rates out there, especially fixed rates. I've never been a lover of fixed rates because of the flexibility they've got now. There's a different. I've got a different attitude towards some of them.
Sure.
With some of the lenders, of course, not everybody.
Yep. So if you haven't refinanced in the last 12 months and you've got at least 20% equity in your home, then perhaps it's time to get in contact with your mortgage broker or Alex. I'm sure would love to hear from you to look at refinancing, as you may very well save some money. Fantastic, and thank you again for having us today, Alex. It's been a pleasure. I'm afraid that's all we've got time for today, but Alex, before we let you go, how can people get in contact with you?
Well, by email, but I won't give you my email address here.
I'll put that in the description.
Or phone me 0411 187 580.
Excellent, thank you, and we look forward to speaking to you again. Alex, thank you. Thank you for joining us too. I hope you found this information to be useful. If you have any questions for Alex, I'm sure he'd love to hear from you. Similarly, if you have any questions for us, please comment below or get in touch with us at hello@rosieandrosie.com.au. We'd love to hear from you too. It's been a pleasure having you with us, but it's time for us to go. Until next time, I'm Matthew from Rosie and Rosie, helping you invest in property with confidence.